It's your money and your money matters. For the best advice to help you succeed, turn to Gib and John. They know what you need to make the right financial decision.
Isn't it interesting that we are a money show, and the money show we're talking about the effects of money and what you need to do about your money, and we're focused on politics. There is definitely now a timeline.
There's a timeline. The Senate today is supposed to release its version of a bill.
Notice it's not taking the House and just they're doing their own thing.
They're doing their own thing.
So we got two bills.
So we'll have two bills, and that way they'll begin to compare and contrast.
Right. Your bill's better than mine. Mine's better than yours.
Absolutely.
I don't
It's
like
time of reconciliation.
I don't like you.
It's a contest of which I can't talk about, but you know it happens sometimes with dogs and fire hydrants. Yeah, that's kind of what we've got going on right now.
Yeah. Do you think this will be what will create the reset?
If we move into 2018 and it moves into the second quarter, which is looking at a timeline, is most likely possible the passing would happen in the summer of next year. The market, I think, would have taken some back. And I do think the market would have also taken some back because you've also got the Fed moving in December, which is already built in, I think, into the market. But perhaps they've moved one or two times since then. And then the effect of the balance sheet being allowed to roll off into the markets, I think would have an impact, because I think you'll see interest rates increase, and I think you'll see a little bit of inflation that hasn't been there. We're seeing it. The average portfolio that I'm working with has about 70% in the market, starting back in the first of the year.
Right.
With 30% defensive. In that time frame, which has been now 11 months, it's now what we're seeing is that's gone to 80-20. So by no movement of more fixed income to equities, just by sheer growth, you now have a portfolio that's gone from a growth with income portfolio in our lingo to a growth portfolio. So you've added another 10% into the market by no changes in fixed income to equities.
And you'll find that portfolio will pick up in risk numbers and volatility along the way because of that increased percent.
Yes, and so rebalancing is where we're getting to.
Right.
That we're rebalancing with our clients. And you have to be careful rebalancing if you have non-IRA money, because you're going to pay some taxes on doing that rebalance. And if you own mutual funds, you've got to be really wary of what's something called X dates. And that is when capital gains are distributed by the different fund companies and for either qualified or non-qualified money. But if you move into a fund that has an X date, let's say it's tomorrow, you're going to pay full capital gains in a non-qualified investment, and you were only in there one day.
Right.
So you got to be really, really careful about that movement. So on IRA money, it doesn't matter because you don't have any excess taxes, because you don't pay any taxes until money actually is distributed. So just something to look at. Look at your 401ks or your IRAs and see where you are, equities to fixed income, and does that still meet your needs as far as risk is concerned. Did you? I think this may have been one of President Trump's grandest moments. That was on the news this morning. He said, and I quote, "I give China great credit for taking advantage of the U.S., but that must change." And he said that with the president of China sitting right next to him.
A lot of tact too.
Yeah,
it was very tactful.
It was done. I think it was one of his shining moments when he says, "Hey, basically, we would have done the same thing, but if you were on the other end of this, you'd be saying the same thing to us, and this has to end. It has to be more parity." And the president from China was in agreement. So these two guys have an interesting relationship.
Yep.